We wanted to understand, when you did this calculation of making India a $5 trillion economy, how you envisage the role of banks and financial institutions. What sort of health do you see, these institutions getting in by 2024 when we have set the target for. So, maybe you can help us in building up the insight. Mr. Subramaniam, mic is yours.
Very good evening, ladies and gentlemen. First of all, let me acknowledge that I'm happy to be here amongst all of you to share my thoughts on the role of banking in achieving this goal of the $5 trillion economy. So I think you aptly described that the banking sector or the financial sector is very important. Let me just take a step back and explain that the financial sector in an economy, you can think about it as the equivalent of the arteries in the body. And what I would want to highlight is that while we often think about the extent of lending, the earlier speaker also talked about the amount of intermediation that is done. What is really critical is to also understand the efficiency of the financial sector. And in order to, touch upon the efficiency of the financial sector, what I would actually do, and this is, I think it will be very useful for the audience to understand, is that finally the financial sector acts as the intermediary that brings together those who actually have, savings and distributes it, basically gives it to those who actually need it, which is the corporates and the retail individuals. Now, in this process, what is extremely important is the way in which that the financial sector allocates the savings into corporates. Ideally, what you want, and actually this is a useful benchmark to keep in mind, is that the allocation of capital, and this is basically the main job that the financial sector does, is that allocation of capital happens primarily based on the merit of the projects.
So, can we look at, other financial options like deepening of the bond market and, other debt instruments? So what is the thinking like in finance ministry? How quickly can we see alternate finance institutions coming up, taking shape? And if you can help us in understanding this.
So, I'll certainly answer that question, but, from just following an 80-20 rule, right? What we need to understand that not only India, but many other countries in the world, are predominantly bank-dominated systems. You take a country like, Germany, you take Japan, these are countries that are bank-dominated systems. Undeniably, we should be talking about, and I will come to your question about DFIs and bond markets, but when we talk about the $5 trillion goal, and given the fact that so much of the of intermediation in India, over the next 5 years will certainly happen through the banking sector, it is extremely important from a prioritization perspective to delve very carefully on the banking sector and how to basically enhance the quality of intermediation.
What is the big game plan Government of India is working on? We have heard about mergers. There was a session in the morning. So, what is the big game plan, Government of India is thinking about?
So, again, I come back to the issues in essence. I will, talk about some of the questions that, aspects that you're raising. But when we talk about bread and butter banking, it is about ensuring that lending happens in a way without creating too many NPAs. To me, when if I were to write down the 5 main things basically for the banking sector, it would be quality of lending, quality of lending, quality of lending. That's what I would basically. So I will certainly answer your question, but just from us as a senior management, it's really important to prioritize very well. And this is the priority. Therefore, I do want to touch upon that before I come to, and the importance
if you want to take my supplementary to this, most of the businesses, they have government as one of the parties. Either they are giving them services, or they are doing projects for them. But we have seen two things, even in the World Bank's recent report, government is not being able to adhere to the sanctity of the contracts which they do. And second is the payment schedules. If government institutes can ensure these two things, I believe, the risk for, these private players who are rendering services and projects for government, if these things can be taken care of, many of the things can be resolved on the go. What do you think about this?
No, see, what you're talking about, I'm not going to deny those are important. But if we go back, basically look at the, last 20 years that has happened, what has happened in the banking sector. It's not because, let's say the NPAs that got built, around 2014, 13, 14, it's not because of actually payments that let's say the government stopped, right? Or for that matter,
that was more because of inefficient, government policies. No?
Which is what see, I'm trying to explain an important point. And please allow me to actually explain that. That even if we go back to the 98, 99, we actually, even then, we had, this sort of banks building up NPAs. In other words, when you look at over a 20, 25 year period, the key issue is ensuring that banks basically are able to do their basic business of actually lending to large corporates in a way that they don't end up creating NPAs. And I'll come to, in other words, what I'm trying to say is there are, among many issues, there are some very, very important issues, and I want to actually focus on that. And I'll come to the other issues, but this is the most important.